Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I have a very detailed chart to share with you guys that's going to map out 10 years worth of price history in Bitcoin. I feel like this is the most important thing that we can really talk about, especially as we get closer towards the end of the year, which historically is a point in which we see Bitcoin top inside of its price history. Now, as we get closer towards the end of the year, I have a really cool chart that's going to map out exactly what I think could happen. It's going to give you guys a couple different scenarios that I think we should be watching for, and it's going to give you guys a deep dive into Bitcoin and really what we've seen up to this point in history. I know this is something that's going to help you guys out a lot, so make sure you guys stay all the way to the end so you don't miss out on any of this information I'm about to share with you. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And if you guys want to join the Discord server, check out my free members area. You guys can also sign up by clicking inside the description and finding the invitation link there, along with my free ebook and beginner's guide to crypto. That free ebook's full of a lot of information that I know is going to help you guys out tremendously, so check it out. Links are provided for you in the description. And with all that being said, guys, let's jump right into this amazing video today. Alrighty guys, so here's the chart that we're actually going to be talking about for today's video. I wanted to spend a lot of time mapping out the price history of what we've seen inside of Bitcoin, just to give you guys somewhat of a speculation as to what we could potentially see getting closer towards the end of the year. Now, as we get close towards this end of the year time frame, it's important to understand where we're at in this cycle so that we can understand whether it's actually a good time to be taking profits or not. And so I've gone through and kind of mapped out a sequence of events that I've seen play out inside of Bitcoin cycles to help give you guys maybe a bigger picture and understanding of what to expect moving forward, and really an understanding as to if maybe you just jumped into the market, maybe you're just now trying to understand what the heck you're actually doing and what is going on. This is a chart that's going to help you guys out a lot, and it's easy to understand. So first things first, we're going to be talking about the Bitcoin cycles. We're going to be mapping out, like I said, the sequence of events that takes place, and then we're going to explain the similarities that we do see. Now, what we're going to notice here in this last, or what I should say in the first cycle over here, we basically skip 1 year, but it's still very much the same. And so whether we look at this from a cyclical perspective with the 4-year cycle timeframes, or whether we look at this from even the potential of a lengthening cycle time frame, I don't think it really matters, because what I think is the best strategy to do, especially as you get closer towards the point where you think you're going to be taking profits, is really watching for the price action to share with you guys what actually looks like a cycle top. And what we've seen up to this point inside of the cycles is really after we go through this bear market, we go through this accumulation period. This is where Bitcoin either goes through a sideways accumulation or it starts making higher highs and higher lows. In the case of this early cycle, it just immediately started making higher highs and higher lows. And then what we can see here is we get this breakout of the all-time high into price discovery. We get this midway cycle sell-off, and the bottom usually takes place at about July, which precedes us to the blow-off top in the cycle. Historically, blow-off tops have taken us around the end of the year timeframes. This one topped at the very end of November, whereas if we look at this first cycle, which I really don't talk about it a lot because this was pre-halvings, we had never even had a Bitcoin halving up to this point. It didn't happen until right here, which is interesting to me because this is right where we have the first Bitcoin halving, was in this period. I don't remember the exact date, but it was in November. And what we saw after that point was really where Bitcoin syncs up into the 4-year cycle. And so I've always figured Bitcoin was going to keep doing a 4-year cycle. And this cycle was kind of an outlier because there really was no liquidity and there also wasn't any halving. So that's why I've kind of ignored this cycle. But if you do look at it from a lengthening cycle time frame, then obviously speaking, if we analyze each and every cycle, the cycles have lengthened over time. Now, what's interesting to me here is if we analyzed the 4-year cycle time frame, we would have got a cycle top all the way back down in here. So Bitcoin obviously had a massive run up even after our end of the year threshold, where we would have expected to see a sort of a cycle top here. And so with that cycle being so vastly different than all of these other ones, I've kind of expected that the frequency and the likelihood of the cycles playing out similarly as they have is more likely because we've continued to do that up to this point, and I'm going to explain to you guys exactly how. So the only real difference here is we pretty much just skipped 1 year. We don't have one extra year worth of accumulation and what we would have seen inside of these two cycles. But after the halving is where we actually see the cycles line up almost exactly the same as what we've seen up to this point. And that's why I've kind of said, I think the cycle halvings actually have a lot to do with the 4-year cycle time frames as a whole. Now, after we see the first halving, we start to sync up with this cycle. And that's where we get this breakout at the all-time high. And if you're going to notice, this is actually what's played out in our most recent cycle and the cycle that we're in right now. And after we hit this July mid-cycle low, like I said, this takes us to the blow-off top. Now, this is where we're going to see a lot of similarities in the market cycles over the next couple years. And really the next, 5 to 6 years, over that length of time, this is where we see a lot of similarities. Now, inside of the bear market, over the last 2 cycles, we've seen almost near identical where the bear market is 1 year in duration. This only cycle that didn't do that is the one over here. And so we had almost 1 year exactly worth of a cycle low. In fact, this one was actually 45 days longer than 1 calendar year. And so we ended up getting a cycle bottom here at about January 11th, 2015. January 11th until the beginning of 2016, we pretty much just go through this sideways accumulation and our first higher high in the cycle. And then in one more extra calendar year, that pretty much takes us to the all-time highs. And then in year calendar 4 is where we get the breakout of the all-time highs and into price discovery, right? And so this is kind of what I talked to you guys about with the 4-year bull pattern. I've talked to you guys about this a lot because I think it's really important that we analyze it. What we notice inside of that pattern is every year we kind of get this new shift of events. From year 1, it's pretty much just the end of the bull market and the beginning and the end of the bear market. From year 2, we pretty much see accumulation. And then from year 3, we see more accumulation, but that's where we usually get the attempt at breaking the all-time highs. Or in the case of this most recent cycle, we actually did break the all-time highs back inside of year 3. But it's very similar to what we saw in each of the last few cycles. What we see here inside of the first cycle is inside of this, if we ignore this year 1 due to how short this cycle was and we kind of line it up with what we see here, we can still draw a lot of the same conclusions, right? We still see a cycle low taking place here at the end of the year. And then we get 1 calendar year worth of uptrending before we break out. We pretty much just skipped 1 year, right? We had 1 year worth of bear market in all of the other cycles, whereas we didn't see that inside of this one. We actually got 1 massive bull run to finish it. And so that's the only difference that we see between all of the last cycles. They're all the same besides that point. And so as we get closer towards, this year 4, specifically as we're at the end of year 4, it's important to understand what historically has happened. Now, in 2013, after our July low, we ended up getting a blow-off top that took us to the end of November. We're actually past that point, and Bitcoin was already topping in that 2013 cycle. So we already know that we're going to be going longer than what that shows. But what we can see here, as far as if we look at what this final year showed inside of that cycle, it looks very similar to what we see today. We get the breakout of the all-time high. We get that midway sell-off, and we get the same July low that takes place. We get that same year. It looks very similar. The only difference here is Bitcoin has made 2 higher highs, and we've got these pullbacks each of the last 2 times. Whereas what we saw after July was 1 higher high, quarter 4 opened, and then we just saw Bitcoin immediately go into price discovery. So there's a difference, and I'll explain to you guys why I think that there's a difference. Mainly just because there was a lot less liquidity back then. You guys got to remember that Bitcoin's market cap was maybe 15 to 20 billion as it peaked in 2013. So it was a very small crypto. It was a lot smaller than many altcoins that we see today. So there wasn't very much liquidity, and it didn't take much money to send it up into price appreciation that quick. In 2017, we did see much of the same thing. In that final calendar year into the blow-off top, we saw this July low, and then what we saw after that was Bitcoin made 1 more big higher high. It made a new all-time high, pulled back, retested the previous all-time high, and then kept going up into price discovery. By this point in the year, Bitcoin was already up at $8,000, $8,500 approximately. And so Bitcoin was already at the point of its blow-off top in 2017. We saw that in both 2013, we saw that in both 2017. Now, what we can see as a similarity inside of this cycle today, we've seen all of the last events that we've seen in the last cycles. We've seen 1 year worth of a bear market like we've seen in 2013 and 2014 to 2015, I should say. We saw 1 year worth of a bear market. Now, after that following calendar year, we see 1 year worth of accumulation. It's very similar to what we saw back in the day over here. Instead of Bitcoin going sideways for 180 days and then making a small higher high, Bitcoin went sideways for 3 months and then made a move all the way up to the 618, which, was like $14,000. So we had a much bigger move to the upside, but we also had a much greater correction to the downside. So it was a lot more volatile, but nonetheless, if we draw a trend line, it's very similar to what we've seen in prior cycles. There's not a whole lot of difference here, besides COVID having a factor with this panic wick that we saw right here. That's the only difference, which I don't think would have actually happened. I don't think it would have been as big. It could have still happened, but it would have been a much smaller sell-off. And I don't think that it would have closed much lower below this $6,700 support. And so that's the only major difference that we see between each of these two cycles. We get the same July low. We get the same breakout of the all-time high. In fact, this most recent cycle broke out of the all-time high quicker than 2017 did. The only difference that we're seeing is the length of accumulation that we've been in over this last year. This is year 4. We've always expected to see a massive blow off top into year 4. This is kind of the way that the cycle has. This is kind of the way that the 4-year cycle has lined up. Now, what we have seen inside of the most recent breakouts, we've seen big impulses onto the upside, but we've had these periods worth of sideways pullbacks. And it's really caused a lot of people to get shaken out. Really, a lot of people are in disbelief, not thinking that we're going to have such a big move to the upside. But as we've gotten closer towards the all-time highs, I think that people are more optimistic. We're going to watch and see what happens with Bitcoin, but I believe that we're going to be close to a bottom, if not at a bottom right now. And this is going to take us into a big move into price discovery, like what we've seen up to this point. Now, keep in mind, guys, we've had such a long accumulation. And one of the things I often used to tell you guys was the longer the accumulation, the bigger the expansion, right? This is something I used to tell you guys about a lot because I really do believe in it. We saw this with Ethereum. Ethereum went sideways at $200 for, 2.5 years. And I used to say, the longer the accumulation, the greater the expansion. Ethereum's going to have a much bigger and quicker move to the upside. And what ended up happening was Ethereum did a 30x right after and went to $4,500. And so in the same way that we saw that with Ethereum, we can say the same thing with Bitcoin. Even though we're in the final year where we've expected to see something like this taking place and we haven't, the length of this accumulation is going to lead to this type of a move. And I don't have a problem being wrong about the exact end of the year playing out as our 100% cycle top. I have no problem ignoring that if we aren't at a point where the price, or what I should say, the price action doesn't reflect that. If we're at this point where we're breaking out and we're making moves like that, I want to see a big move to the upside, right? I want to see something like this, where we get a big parabolic move. That's what I'm looking for to sell into. I'm not looking to sell into anything 100% based off of a time frame, especially because we haven't even got to the point where we're in a parabolic type move, right? We did technically make a new all-time high, but we're still within the previous all-time highs inside of this sell-off. I'm not any less bullish. In fact, I just think that what this is going to create is another one of these type of moves with the length of accumulation that we've seen thus far. I mean, if we measure a date tool from the exact cycle high to where we're at today, we're already 230 days into this. If we compare that to what we saw back here in 2013, we're a lot further into this than what we saw over there, right? That one was about 190 days approximately worth of accumulation, which led to the blow off top. We're already way past that, and we're still right within the previous all-time highs. I think that it's going to take a lot of accumulation to make this amount of money inside the market move, and that's kind of what we're seeing reflected inside of the charts. So what we've seen inside of the last two cycles, comparing this cycle to the one in 2013, has almost been the exact same time frames. There's really no difference here. We saw 1 year worth of a bear market. In fact, one thing I do want to point your guys' attention to is in 2013, or what I should say, the end of 2013 and the beginning of 2014, all the way into the beginning of 2015, what we actually saw here was this lengthened 45 days past 1 calendar year. So if the bear market can be 45 days longer than 1 year, what's to say the cycle top can't also last 45 days longer than our projected cycle top. And so what we've always said is 4 years from our last cycle top, which is going to be over here at about mid-December. So if we get 45 days past mid-December, we're looking at the end of January as our projected cycle top. And so this is the thing about time frames that I want you guys to remember, is they're really meant to be used as zones. In the same way that I've always traded and taught you guys support and resistance, how it's going to be a zone. There's not going to be one specific line that you can draw that the price is always going to hit right to that line given, and then it's going to pull back or go up. It's not going to be like that. In fact, you're going to see the price action behaves within relative zones. It's going to go close to certain areas, and it's going to consolidate between certain levels. And with time frames, it's going to be the exact same way. I do believe that we're going to get the projected cycle top with the exact given time frames that we've been up to this point. I believe that what we've seen up to this point is really just the same as what the previous cycles have shown as well. It's just that what we've seen inside of this most recent cycle has been a lot longer worth of accumulation. And I still believe that it's going to lead to a massive type of blow-off top rally. We just haven't actually seen the blow-off top type of rally. And so, like I just stated over here, if we can see 45 days past 1 calendar year in a bear market, we can see 45 calendar days past a year inside of a bull market. We actually haven't seen that up to this point. One other thing that we've seen is really just the fact that each top of the last 2 cycles has basically lengthened about 2 weeks. This one is about 15 days worth of lengthening. And so if this happens in the last 2 cycles, we could easily see the same thing play out again, which is going to be pinpointing towards, the end of the year as being our cycle top, which is obviously getting less likely the closer that we move towards this time frame. We have to see a big move to the upside, which I don't actually think is anything, impossible. I still think that we could close the calendar year of 2021 at 100K. We've seen these type of moves play out inside of Bitcoin. The only thing is we're always dealing with, we haven't seen the move yet play out, and so we're waiting for that thing to happen. And so until it actually happens, we don't know how it's going to play out and line up with our time frames until we actually get there. The point that I was mainly trying to make with this video was mapping out what we've seen inside of the last cycles, kind of explaining how similar these really are, especially this cycle and the last cycle back in 2014 to 2015, right? 2016, 2017, that entire cycle that we saw back then. Really, even if we come back to the first cycle back in 2013, we even see a lot of the same similarities, especially after the halving. And that's one of the points that I wanted to make here, is if we look at 2013 as somewhat of a guide to what we're seeing in today's cycle, it's really no different for the most part. The only difference is it's a lot shorter, which is almost to be expected mainly because of how much less money was in there at the time. So if we take this cycle from 2013 and we bring it all the way up here. So it's not really going to look very good because I'm on a log scalp, but you guys basically get the picture. This is roughly the same sort of accumulation that we're seeing as what we really saw in 2013. The only difference is this one was a lot shorter. We were already topping inside of that last cycle. I don't really think the big focal point should be so much on the exact day that the cycle top is going to be. We know that the historical time frames have been an accurate outlier to show when a good point for taking profits is, and we know that that is flashing based off the last 2 cycles. And so I think that what we can look for at the end of the year is really analyzing what the price action is showing us. We want to see a blow off top. I'm not going to be selling unless we see a blow off top, and I don't think you guys should be selling unless you see a blow off top either. We need to see some type of a parabolic rally before we're looking for major profit taking. I've been a big believer in the time frames, and I still am a big believer in the time frames. But I'm also somebody that realizes that a good time to be selling is when the prices are going up in a parabolic rally, not when the prices are going sideways, about to be breaking all-time highs. And so I still think we're going to see a massive move to the upside. That my bullishness has never wavered in the slightest. I'm still super confident in all of that. It's just that what we've seen has been a lot longer worth of accumulation, which ultimately I believe is going to lead to a much bigger type of expansion on the upside. So it's really not a bad thing in the slightest. This is all good. What we've seen up to this point is very good. Markets look very bullish. And so to talk about this video was mainly just to give you guys a lot more confidence surrounding what we've seen, surrounding, the end of the year time frames. This isn't really any different from prior cycles. we have really just gone a little bit longer compared to the last two. It really shows the most resemblance to 2013, but even then we're going longer than that. And so it's going to be interesting to see how it actually stacks up. We got about a month left until we do get towards that end of the year time frame, so I'm going to keep you guys updated along the way. It's going to be interesting to see what actually happens. If you guys found value in this video, leave a like, comment, and subscribe. Hit that notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server or download the free ebook, links are in the description for that. For the people who'd like to sign up and join my VIP, follow the trades that I take, know what I'm doing inside the bear market, investing into stocks, commodities, things like that, links are inside the description for that as well. Thank you all so much for supporting this channel. Thank you guys so much for watching this video. And with that being said, I will catch you in the next one. As always, peace out.